All right, good morning, everybody. Sorry, I'm running a little late. Had to fix a couple of bugs here. Not a new day unless we have a new technical difficulty, right? All right, let me pull up a trade plan from last night here. All right, let's take a look here. Do we need to change this? Above 680, we're looking for 95. That did get hit on the pre-market. But funny enough, that would basically be our target anyway, because the overnight high is 97. So we'll just raise that to 97. And the next target would be around 720, which is that next extension. Holding below 70, we are looking for 52 and 42. We could just raise these up like one level. So we'll say, let's see here. We'll raise that to 97. We will raise this to 80. And then this will come up to 70. And then this will come up to 52. Basically just bringing everything up one level because we are slightly bullish on that pre-market. Still maintaining that same bias, that P-shape bias. It's not exactly a P-shape. It's kind of like an extended D-shape. But it is trading like a P-shape. Just needs to hold on to that value low. Probably the same thing with NASDAQ. Just updating our levels a little bit. Let's see here. So we finished filling in that extension there. Let's go ahead and say holding above 630, the current value high. Let's say it's going into 715, and we don't have a level above that. So let's just say the whole number at 800, and we'll go from there. Holding below, let's say 555. We're going to look for 478 and 394. Those are good. Also still holding that P shape. Not exactly a P shape. Like I said, it's kind of close to a D shape. But we have that bullish bias as long as it's holding above that value low. All right, just in time for the open. Let's see what happens here. All right, a little bit of a discrepancy here. NASDAQ going down, ES going up. We are back testing VWAP here. A little bit of a bear flag and a VWAP. 30-minute sweep on the high, but it's also sweeping the low, so a bit of a indecisive doji right now. Alright, looks like we're retesting one of those reversal points here. This is back from 3 a.m., the London Open. The London Open being retested. So far being held as support, not quite finding any value below it. Good morning, everybody. Good morning, Jose, Scott, Backpack, and Marcel, Nitro, Igor. It's you, Christopher, Banana, Lubomir, Trevor, Keegan. Good morning, Leo, LDT, Liquidated, Morris, Larry, Caleb. Good morning, Faraj, Lulu, DS, 2013, Roman. Good morning, Clive, Angelo, Fernando, JC, Curtis. Good morning, Street, AT, Estevan, Criso, Alex, Future, Ranger. Sorry, Rangel. Ritus, Orion, OM, eBay, Ram, Crypto, Profit, Darius. Good morning, everybody. Appreciate you guys being here. I think we have some data after the bell, don't we? Let me see. A little bit at 10 o'clock. We had the core retail sales came out a little bit high. Retail sales also came out high. And what do we have? Business inventories at 10 o'clock. So we'll keep an eye out for that. Looks like NASDAQ is leading us down for now. We do have that rollover gap. We have a 60-point gap down to 66.16. If that FOMC is bearish, that would be a pretty obvious target, targeting that rollover gap. 5-minute trail doing a fantastic job right now. Keep an eye on that 5-minute trail. Look at the 5-minute trail here. Beautiful trend. Sell signal, sell, 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 every single one giving a new low. Very good trend. 30 minutes starting to lose that trail, so getting a little bit dangerous here. We have not lost that trail since about 1 a.m. on Monday. We have a very long blue pivot all the way down around the 30s. Putting in a new pivot right now, trying to at least. 1-minute pivot on NASDAQ as well. Keep an eye on that. I've mentioned the London Open plenty of times before. I just don't really track like the exact level. The London Open is typically around 3 a.m., 4 a.m. Just generally when I'm looking at the overnight, that is the London session. So I'll say like that's the London session or European session or whatever, overnight. It's all the same thing. When I talk about holding above or below levels, what time frame? Time frame doesn't exactly matter. It's more so a pressure thing. Like, are they able to hold buy pressure above that level, hold sell pressure below that level? Are they building nodes? I have a couple of shorts on that. I think it's called, like, confirming a level or something like that. Yeah, at this point, you definitely want to roll over. Yesterday, you could have rolled over. The volume was a lot higher on the new contract. But by now, you definitely want to roll over to the new contract. I mean, we can take a look. Volume right now is 38,000. Let's go back to the old contract. Yeah, look at that. 8,000. So you do not want to be trading this contract. Volume is like 5 times higher on the new contract. Yeah, Chris, I've talked about that plenty of times before, actually. I talk about that a lot in crypto. Um, I've talked about my strategy that I used to use in crypto back in the day about instead of using a 24/7 profile, it's just way too much data. You can break it up into like 4 profiles. You can do the New York, Asian, European. You can kind of break the American day up into like two profiles. Yeah, it's a pretty big system breaking up large days into multiple profiles. Same way that I do it with the overnight. I just don't care for the exact levels. I don't care for the exact to the minute open of those profiles. Looks like that sell pressure on NASDAQ is pulling you down here. Large tape is pretty quiet today. Not too many orders coming in. You are losing that prior reversal point. So next reversal point would be around 74, that next point of origin. Building a little bit of a node here at 80. Very aggressive, protecting that ADMA. There's the new low from the 5-minute trail, giving you that sell signal back at 86. Basically the VWAP, bear flagging a VWAP. Yeah, looks like we were right about lift. We put lift on our list for the accumulation trades, but I was afraid we missed it by like a week. We wanted to get in that $15 pullback when it pulled back into that weekly pivot. And it's already back, it's back at 20 now, so we were in fact a week late on that, unfortunately. Already up 25% off of that pivot. Still has a lot of room to climb, possibly long term. Might be able to go to like 32, maybe 40, but just a bad entry now, unfortunately. That's what sucks about those trades is like, it's not like day trading where you miss a trade. It's like, oh, whatever, just wait like 15 minutes, 30 minutes, you'll get another trade. When you miss those trades, those are like 3 to 6 month trades. So those are painful to miss. Okay, so we have to see, is this just a rotation of today, or are we possibly retracing yesterday? This is kind of the decision point here. Staying below 55 is pretty bad. ES is kind of already at that point. If it stays below 78, it's pretty bad. Going down to 70. So right now what we are seeing is an overnight fade. Now, unfortunately, the overnight fade started pretty early. The overnight fade started around the London session. So you had the Asian session pushing up and the London session having that overnight fade. So we weren't really able to trade that as an overnight fade on the New York Open, unfortunately. The overnight was already being faded by itself, basically. Why does this have a gap? This should not have a gap. There we go. Here's our weekly VWAP. Weekly VWAP is 75. It's not going to work, I don't think. All right, a little bit of absorption at 77 here. Let's see how it plays out with this absorption. That absorption is so strong, it's actually shifting the POC instantly. Here's that point of origin we marked out earlier. Point of origin down at the mid-70s. Reacting beautifully so far. Keep a close eye on this bounce back into the daily VWAP and the 24. If it's pretty aggressive, it's going to sell that pretty much immediately. Nasty block trades coming in. Bearish block trades. 1,300 contracts, 500, 300, 500, 300 again. All basically on that same level. Massive sellers on 77 to 75. This is retracing yesterday's value. Nearly retraced already. Looking for around 69 to 70. Let's take a look at NASDAQ. NASDAQ about a third of the way done, looking for 478. Watch that POC. Possibly stalling you a little bit. Look at this delta coming in. Massive bearish delta. People are unloading to the downside here, which is what we wanted to see. We talked about this yesterday. If you guys were in the Discord, we talked about this on my closing statement at 4 p.m. How I would prefer today to be bearish because of that weekly open strategy going into the FOMC. We don't like when it pushes away from that weekly open going into FOMC. We like it to act as a magnet, especially in September. September really likes that price pen strategy. And there is our last reversal point of the day being taken out. So all of our points of origin have been completely taken out. Let's take a look at a couple of points from yesterday. A little one here, but it kind of overlaps. Yeah, this entire zone is just filled with points of origin that led to big impulses. So buyers are very strong from 75 down to like 65. Pretty much the entire area is one big zone. You can see the buyers stepping in as well. Look at the delta flip here. A little bit of absorption into a delta flip. What's going on, Michael? I follow kind of the same principles of a value retrace acceptance when it reclaims the prior value. Kind of goes back to what I was talking about earlier with those shorts that I made. They discuss when levels are being reclaimed and like how you can trust when levels are being broken. That's kind of what I was talking about. It's like reclaiming a value high and then building value on the other side of it, something like that. The exact weekly open, let me see, 45, yep. No, I don't care about TPO count. I don't care about, like, number of candles closing, stuff like that. It's all about pressure. It's all about what's actually happening. What's the delta doing? What's the value doing? What's the order flow, right? I don't care about, like, exact 5-minute bars and stuff like that. Bullish delta being flipped immediately, giving up on that ADMA. Alright, that zone is done. That zone is done. This little small zone is done. Got a couple left. Going down to 64. You go into the delta settings, or what cluster settings. That's where all the footprint stuff is. So it's not in the indicators where you would think it is, it's on the chart settings. Still getting a ton of bearish delta here. They haven't really gotten a lot of profit. They are kind of being absorbed. Need to see how they react to that 77 level. That's kind of where all the absorbed delta starts to get in trouble. Bid and ask would be more for traders that are kind of like into the level 2 stuff. They're looking at the liquidity more so than they're looking at the like traded orders. People who trade like the book map style, level 2 style, they probably prefer bid and ask. It's all personal preference at the end of the day. Not seeing any sell pressure below the 70s here, 71. All these sellers, these ones here, all these sellers here, all kind of being stuck. Very small bull div here, higher low, lower low on delta, which also goes hand in hand with that absorption we just talked about. Keep an eye on all those trails. We'll see if we start waterfalling back to the buy side. Right now, we are obviously very bearish. Pretty much every single time frame is a red trail, and now the 30-minute has flipped into being a red trail as well. There's that flip right there. That pivot that came in on the high. Oh, sorry, it's a different pivot. I was going to talk about the pivot yesterday, but same thing. So we have a pivot on the high here. Not seeing any buy pressure above it. But same thing yesterday. We had a pivot come out on the high. We tried to put in buy pressure above it, and just could not do it. And it finally did it later in the day. I think it was like the overnight. But that's kind of what we're seeing here. You put in a pivot on the high, you just could not get the delta or momentum above that pivot. Getting a little bit extended on the lower band. It is riding the band, which is okay. It's like kind of going in and out. It's just like sitting on it. That's okay. But if you start putting like full candles outside that band, that's a problem. So getting a little bit aggressive here. Here's another push down. Yeah, it'd be a perfect weekly open strategy if it pulled it back before the FOMC. Not exactly DS. They're not showing the same data or anything like that. But if you're asking if there's like a strategy with them, then you're gonna have to find that out on your own, right? You would have to test that and see if there's a strategy there, which I'm sure there is. RSI is possibly one of the most used indicators in the world. Here's the point of origins from yesterday, going down to mid 60s. Here's our 70 target, by the way. Our trade plan target at 70 has been hit. And that is the value retrace of yesterday. It has been completed. So now it gets very dangerous. If they stay below 70, this lower tail is extremely weak. There's not really a lot of value here. It was a very one-directional move. They did not build up a lot of value. So if the sellers find value on the way down, it can go back to that weekly open very easily. NASDAQ only about probably a half or a third of the way there to the value retrace of yesterday. So keep an eye on that, 478, which is funny because it seemed like NASDAQ was a lot more bearish out of the gate. They're trying to put in a 30-minute sweep on that 70 level. Keep an eye on the buy pressure above that. We'll see if that buy pressure comes in. So far, it's a very strong downtrend. The buyers are being annihilated. Just not seeing any sustained buy pressure. You can see the market structure here. The like highs of the clusters are just not finding any buyers. Like all the highs of these candles, they come up, fail, come up, fail, come up, fail. You're just not holding any value on these highs. Now the same could be said with the lows, but not to the same degree. Because the lows are finding lower value every now and then, right? Not every single candle, but they are pushing to the lows. So yes, it is sideways, but it's a little bit bearish buys. They are eventually getting what they want. They don't want to hang out here for much longer, though, I will say, because it is creating a bit of an absorption, right? The sellers keep getting absorbed on this like 70 area, which is that value low, right? That is a very key level. If this absorption was happening kind of in the middle of nowhere, then it wouldn't really matter too much. But it is happening on a very important level. You do not want to see sellers getting stuck on a prior value low like that. Possible bear flag in the VWAP on NASDAQ. This is the weaker VWAP. It's the daily VWAP. And this is something I'm going to go over pretty extensively in our new series when I talk about market structure, but I talk about this a lot on stream with like these like do not care zones and times when you just don't really care too much about what is going on inside of a range, right? And that's kind of what's happening here. Like our market structure is very clearly bearish. We're putting in lower lows, lower highs. Like obviously if you zoom in too much, you see these little bounces here and there. That doesn't mean that it's bullish. There's just nothing happening on the buy side. They're not getting anything. And the easiest way to read market structure is put yourself in the shoes of these traders, right? If you're buying in this area, are you happy? No, you're not happy. You're getting destroyed. So these buyers are losing. They're not getting anything that they want. So then you keep doing that. Okay, if I'm buying down here, am I happy? No, you're not happy. You're literally still losing. So this is still a seller market. They are still getting what they want. They are getting lower highs. They are getting lower lows. So all this little buyer chop in here, you don't care about it. Because like I said, put yourself in their shoes. Are you winning? No, you're not winning. So you do not care that there are people buying here. They are getting nothing. They are not getting any profit. They are not getting any highs. They are not getting any higher lows, higher highs. So therefore, we do not care about them. They are not breaking our structure in any way. Now, if they start sweeping and then generating like massive bullish delta and putting in these higher lows, then you start paying attention, you start caring. Yeah, that's the easiest way to look at market structure. Just put yourself in their shoes and ask yourself if you're getting what you want. If you're a seller, you could sell almost anywhere down here, and the answer would be yes, you are getting what you want. Now, it wouldn't be great if you were selling these lows. That's not fantastic, right? You're still getting a bit of drawdown, but you are eventually getting lower lows, so you're still getting what you want. But as a buyer, at no time today are you getting what you want. And that goes back to the thing that we always talk about being more responsive than predictive, right? You don't want to predict too much. Because then if you take a look at all of those little buy points and you're predicting and you're like, oh, well, I'm not getting what I want right now, but I could get what I want in 5, 10, 15 minutes if we bounce back to high of day. And you build your trade around this like prediction model of you getting back to high of day, which is very clearly not happening. So trade what the market is telling you, not what you want it to tell you, right? Hopes and prayers is not a trading strategy. Yes, this is the opposite of a vertical distribution, but I would argue that it's not exactly, right? The pattern candlestick-wise is there, but the delta and how aggressive it is, I would say it's not exactly the pattern, because this is pretty healthy. They have good delta, they're continuously putting in lows, they're protecting the lows bearishly, they're protecting the ADMA. So this is pretty aggressive. The vertical distribution is not as aggressive. It's a bit choppier. You know it's a vertical distribution or the opposite, a downward accumulation, when you can't really find the trade on either side. You're like, okay, it's going down, but I can't really find the bearish trade. And I can't find the bullish trade because they're just getting destroyed, right? So when you can't find the trade on either side, that's kind of when you have that pattern. You got here late, is there still a trade? The trade at this point would be either looking for very strong reversals back to VWAP or waiting for those responsive averages, 24, the trail, the VWAPs, whatever it may be. There's not really like a breakout trade here to the downside. It's a little too extended for that. You are still riding that that lower band. We are sitting inside those point of origins from yesterday. A lot of buyer support down here. You are getting a bit more of those buyers coming in. But yeah, you'll find in a lot of your trades, and I see this very often in my tutoring sessions, you'll find if you analyze your trades, a lot of the times when you're taking those trades, the pattern's not there yet. You're predicting that the pattern will be there. Or the opposite side of it, the pattern is there, and you don't trust it, so then you're taking it way too late, right? Need to be more responsive and go off of what the market is telling you, not what you want it to tell you. Keep an eye on this VWAP, 75 and 309. We're finally getting some buy pressure here. They really like this value low of yesterday. That trade is complete, right? That retrace trade is over, at least on ES. It's not over on NASDAQ. But that trade is over. So the buyers feel a bit stronger now. There's not a key reason for the sellers to continue. They need to protect, I think the exact level is 70, right? Let me see. I think it's like 69. Yeah, the exact level is around 69 to 70. They need to hold above that level. And that trade is complete, that retrace. Right now, we have a look above and fail where it tried to find higher value, could not, back to old value. So now we have to determine, do we like that old value where we just kind of sit inside of it, or is that not good enough? We want lower value. That's a pretty strong 30-minute candle. It's only halfway complete. But we have absorption, and we have a sweep on that 70 level. Let's keep an eye on that 30 here. So that first bear flag in the VWAP, well, we had a bunch of bear flags in the VWAP, but this one right here did hit your target, that lower target. Now you're hitting VWAP again, so be careful on that. It has hit VWAP like 3 or 4 times and failed every single time. This is the 5th time. This is potentially a bulldog. It's one of those bad variations of the Bulldog where it's hitting VWAP. No, I have not erased any videos. You should be able to find them. The only videos that are not on my channel, technically, are the streams. They're hidden after like a week. You can still find them. They're just not showing up like right away. You have to go to my Twitter or my Discord and find the links. I just take them off after like a week or so it's not clogging my channel with 1,000 videos. But no, all my other videos are still there. I pretty much never delete videos. Unless there's like a YouTube problem, my videos are still there. Now YouTube is having they're doing some like weird algorithm changes, which is hurting my channel and a bunch of other channels right now. They did some algorithm changes in August. The exact day was like August 10th. We don't know exactly what the changes are, but it has been hurting channels like mine. Making videos harder to find, not recommending my videos, especially to desktop users, which is most of my audience. It's one of the big reasons why we've seen a drop in our viewership on the live stream recently. But yeah, it's just YouTube things, unfortunately. You guys know where to find me. I stream pretty much every single day. I rarely take breaks. So if YouTube's not recommending me, just go to my channel. You should be able to find me there. It's unfortunate they did their changes like right when our channel was hitting a peak. But this is about the time of year where our viewership drops a little bit anyway, around that back to school kind of busy time of the year. The third quarter is usually very busy for just everybody. But yeah, like I said, I'm not going anywhere. You guys know where to find me. Yeah, lore, it's really dumb, man. I don't know what YouTube's doing. They haven't exactly said what the changes are. People are thinking it has to do with ad block. So if you use an ad blocker, it's not recommending the content properly because their algorithm is basically figuring out who's using ad block, right? Some people are saying that it's not even counting views. If your views are coming from a person using ad block and they detect it, it doesn't matter if they watch your content like entirely, it's not going to count it. But that's just a theory. They don't really know just yet. All right, a lot of bullish delta coming in. Keep an eye on VWAP here. So far, the reversal is right off of that 70 level. Right off of that value low. Like I said, that trade is complete on ES. It's not exactly complete on NASDAQ. They're bouncing off the POC. So it does seem like ES is leading. Yeah, I stopped doing the weekly plans on Sunday. They were just not being watched. And it was kind of a pain in the ass because I'm busy on weekends most of the time. So it was like a sporadic how I would release that video. Sometimes it'd be like 4 o'clock, sometimes it'd be 12 o'clock, sometimes it'd be like 10 o'clock. So it's a combination of just being a pain in the ass to make that video and nobody was watching it, so it was kind of a waste of my time. Here comes VWAP. VWAP at 675. This is the weaker VWAP. So if we go for a bear flag in a VWAP, it might go to that session VWAP, 679. So we'll see. No, I don't trade Bitcoin on a daily basis anymore. I only do swing trading. And it's not even swing trading. It's kind of like investing. So I talk about it every now and then, but not like on a daily basis anymore. We can update our levels. Let's see what's going on. Yeah, no real change on Bitcoin. It failed our sell zone. So we had a sell zone at 121 to 125. Damn near topped it right there. Now we're kind of hovering around these anchored VWAPs from this distribution. So it's not really doing anything right now. It's just kind of stuck in the middle of value. Ethereum was looking a lot stronger. But it is starting to get a little scary on Ethereum. Could be a cup and handle, but it really needs to bounce soon. It's starting to look like a rollover. So if it doesn't bounce away from like 43 pretty soon, it's looking pretty weak. It's in a scary place. Okay, looks to be respecting the daily VWAP here, not finding any buyer delta above that level, 75, pretty much to the tick. Not finding any buyers whatsoever. Thirty-minute candle closing in 3 minutes. Looks like they are not going to close as a sweep for now, failing that VWAP damn near to the tick. You would assume bullishly, Larry, but it's you could argue that it's already priced in. But to be honest, there's not really any direct correlations with Bitcoin on stuff like that, because if you look at crypto over a certain amount of time, you could argue that everything makes crypto react bullishly because it just goes up. Now, obviously, we have these short-term pullbacks, but long-term, it just goes up. So it's very hard to make correlations with stuff like that, like the macro stuff. Because, like I said, you could just make the argument that everything is bullish. You give crypto enough time, the argument always becomes bullish. It always becomes it goes up. Perma bears, long-term bears on crypto, they just get destroyed. Time and time again. You saw it back when crypto or Bitcoin was at 2K, at 4K, 10K. even when it hit 100K. Bitcoin could go to 1 million, and you would still have people that are saying that it's long-term bearish. Yeah, same thing for Ethereum, yep. And that's why I trade crypto the way that I do. You trade it on a 2 to 3 year cycle. And even that, if you wanted to go long term, you don't even have to press the sell button. You could just hold on to it. There is basically no argument that can be made for long term crypto being bearish long term. It has failed every single year. It will continue to fail. I mean the argument, not the asset. What you'll find if you get into the crypto space is the more bearish somebody is, the more upset they are that they missed the entry. That is true for almost every person that is long-term bearish on crypto. They're just mad they missed the entry. It's the same thing with housing. The people that you find that are constantly calling for a housing crash are just people that are mad that they didn't buy or they didn't have the opportunity to buy when it was at a better point, right? And that kind of goes for everything, goes for almost every asset. You could say that for equities as well. It's like me with PLTR. I hate the company. I talk shit about it all the time, but it's just because I'm salty that I forgot to buy it at $8. There was data at 10 o'clock. I forgot to go over it. I apologize. It was business inventories. 0.2% exactly as expected. Housing index, 32 over 33, so still very bad. Solana I don't know too much about, but it is widely discussed as like one of the big three, right? It's right up there with Bitcoin and Ethereum. The narrative was almost that it was going to replace Ethereum for a while there, but Ethereum's coming back. No, I don't trade crypto companies. I would rather just put my money into Bitcoin. I don't really see the purpose of trading crypto companies, to be honest. I think it's just an opportunity cost. You're better off putting your money into the actual crypto, Bitcoin, Ethereum, Solana. Higher risk, higher reward, obviously. So if you're trading the crypto companies, it's just lower risk, lower reward. You could also trade the crypto companies in like your retirement accounts and stuff like that a bit easier. It's not easy to buy like spot Bitcoin in your retirement accounts. But for like your day-to-day investing, your normal investing, I just don't see the purpose of trading crypto companies over the actual asset. There are almost no companies that outperform Bitcoin on a year-to-year basis, right? I'm sure you could cherry pick a few of them if you got lucky. But as a whole, they're just not going to outperform the larger asset. No, I didn't see that. Thank you. I don't know how that got switched back. My apologies for that. The price action will be the same, but the numbers that I have been stating are going to be different. Let me see here. Should be this one. Yeah, sorry, not sure how that got switched. I swear we switched that yesterday. Yeah, same exact price action, just the level that I was giving for VWAP is obviously going to be slightly off. Yeah, it's just by design it goes up. It's just that simple. By design, it's like gold, right? It just goes up. Now, whether you agree with that or not, like whether you believe that's real value, it does not matter. And I constantly preach that in our day trading on like ES, right? It's kind of like politics or like all this other bullshit that you want to care about. The market does not care about your feelings. You can sit here and like cry about, I'm not talking to you personally, I'm just saying anybody. Anybody could sit here and cry about, oh, it's fake money, it's not a real asset. Why do people invest in it? Blah 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 blah. The market does not give a shit. Stop trading and investing based on your feelings. It's like back in the Discord when we were trading these stupid ass NFTs, these penguins and these seals, and I mean, you name it. We were trading like Care Bears. We did not give a shit because they were worth more money than when we bought them, right? Sometimes we bought that damn bear for $4,000 and it went to zero like the next day. But other than that, we made money on most of those. Yeah, don't invest based on your feelings. Don't invest based on your politics or like any of these other arguments you want to make. It goes back to what I was talking about. Be responsive. Trade based on what the market is telling you, what the chart is telling you. A great example is the American Eagle trade, right? American Eagle was being very heavily politicized, right? People were talking about all this politic bullshit with American Eagle. I did not give a shit. I traded it because the chart looked good. And look at that trade. That trade went from $12 to, I haven't looked at it recently. Is it above 20? It went to almost, yeah, it went to $20 basically. It went from $12 to $20. And that's a great example of what I was talking about. It's like that Lyft trade that we just missed by like a week, unfortunately. I don't think that company's a very good company. But who cares? The chart looked good. Unfortunately, we missed that trade. But it is, it's doing all right. Okay, Bulldog failed on NASDAQ, trying again. And now you have another potential Bulldog on ES here. A recap on the American Eagle trade? Yeah, I can go over it real quick if you guys weren't here for that. It's that same pattern that I talk about all the time when we do our longer term trades. It's that kind of down move. You have like you attempt to find higher value, fails to find higher value, and you go on this nasty drop for a long time. And then you accumulate for a long time. And we're trying to predict, well, predict's kind of a bad word, but we're trying to bet on this accumulation coming to an end. We're betting on that shift in value. We're betting on that failure to rotate. We're rotating back and forth. We're betting on that failure to rotate that turns into a breakout and we go back to this higher value. And that's what happened. Now, it lined up with all the politics stuff and the, what's her name? Sydney Sweeney stuff. But this was the failure to rotate right here. So rotate. We had this big accumulation. This day right here failed to make it back to that lower value. Then we had this aggressive pop up. I think this is when Trump started talking about the Sydney Sweeney stuff. And then we bought it at $12 right here. And my stop loss was like, I don't remember exactly, but I think it was either down here or down here. And I was looking for, funny enough, I was looking for 16. I was looking for this little chunk of value right here. But thankfully my broker does not let me trade after hours. So they did not accept my order at 16 and it opened up at 18. So then we took off a piece at 18 and then I wanted to let this go higher, but it just kept chopping around 18. So we just took off the whole thing at 18. Now, long term, if this didn't do this, if this slowly pushed up, I would have held until 20, possibly even higher. But because it gave us a 50% gain in basically like a month, we went ahead and closed it. But yeah, if it took its time here and it was more of a long-term pattern, I would have held for a little bit longer. Probably like 22, 20, maybe these highs up here. But it was just too fast. When something gives you your trade that quickly, if you're planning on holding something for months at a time, and then it gives you your entire trade in 1 month, you probably just want to go ahead and take that profit. That's at least how I look at it. I do not like being in the market. You guys already know that, right? I don't hold anything overnight, right? I don't like being in the market. So if something gives me my trade with a much smaller time frame, like if I'm aiming for 6 months and it gives it to me in a month, I am very happy to just go ahead and take that off. Because that extra 5 months, that's risk, right? That is risk being in the market. I don't like that. Yes, I also did get lucky on earnings. You're 100% right about that. I typically do not like playing earnings, but if I take these longer term trades that we're looking to hold for 3 months, 6 months, we kind of just have to play earnings and roll the dice. Now, thankfully, even though that was being heavily politicized, that was their largest campaign on record. So their earnings blew up and gave us our trade. But yes, you are 100% right. The earnings really helped us. That's my email right there if you need it. Yeah, JC, no problem, man. Good luck on that account. Yes, 2013. I would have held it. I forgot about the earnings, but I would not have changed my trade at all. I would have paid more attention. But yeah, I completely forgot about earnings. What I probably would have done is I would have raised my stop loss, but my broker doesn't let me trade overnight anyway, so it wouldn't really have mattered. If I was really like scared about earnings, what I've done in the past is I'll take options positions as a hedge. So I'll take like a lotto position for earnings against my position. So I'll take like a lotto put in that case. So if earnings are really bad, I'll make money on the put. Hopefully, if the earnings are not bad enough to stop me out, I'll eventually make money on the trade anyway, because the trade will still go back up. But in the short term, I'll make money on earnings. Worst case scenario, it hits my stop loss. I make a little bit of money on my lotto, but I lose money on the trade. So I might have done that if I remembered there was earnings, but like I said, I completely forgot, and it worked out. And that goes back to what I preach about our day trading, about having those do not care zones. It was in a do not care zone for me. I did not give a shit what it was doing, so I literally wasn't even paying attention. And then unfortunately, it had earnings when in the do not care zone, which I should pay attention to. I'm not talking about price action right now, guys, because once again, it's in a do not care zone. I don't care what it's doing here. Nothing has changed. It has attempted to sweep, failed. It has attempted to break VWAP, failed. It has attempted to change our market structure to the upside, failed, right? So there's no change here. The bears are in control. If it continues to hold below 70, it gets very bad. Because that trade is already completed. That retrace trade is over. So now you have to ask yourself, okay, why are they holding below 70? That trade is over. They are possibly looking for the next trade. And the next trade is retracing this lower tail. And that goes down to the weekly open. So that's what you have to pay attention for here. We started running out of value around 65, 64 yesterday. We'll see if you can find value there. Yeah, exactly. You have an opportunity cost in a trade like that. If I want to hold it for 6 months and it gives me my target in 1 month, I might as well just take that off the table because now I have 5 months to use that money for something else. Go find the next trade. You can use volume profile in that pattern by doing what we talked about, right? Looking for those rotations, looking for where the volume is on that accumulation. So like we're rotating, and then it fails to rotate. You start holding value around that value high, and then same thing like we day trade, it breaks the value high. It looks for higher value. So if I extend this, if TradingView wants to cooperate, there we go. Now they're finding higher value. So very standard failure to rotate, breaking balance. Same thing we day trade. You can do that on the longer time frame. On our watch list for those accumulation trades, we have Intel, Rivian, and Lyft. Lyft, unfortunately, I think we missed that one. I think it's too late on that one, unfortunately. I think we needed to trade that around 13 to 15 at the most. It's already at 20. So we missed that one by about a week, unfortunately. The end of July, start of August was the failure to rotate. It was rotating from 17 down to $10. It failed to rotate by bouncing off 12 to 15. That was the buy. You would already be up 30 to 40%. So taking that trade now is very difficult. Rivian is hard. It's a really hard one here because the rotation is getting tighter and tighter and tighter. You're putting in higher lows and lower highs. So that one is hard to trade. That one's like a POC trade. Intel failed to rotate at $24. It's at $25 now. So now we just have to see if that failure to rotate is going to turn into some buy pressure. And then American Eagle, the trade is over. We already got 50% out of that one. So that one is over. Right now you have like one of those bouncing ball patterns where you hit an accumulation low, you bounce, you hit the low, you bounce again, but each bounce is losing steam. It's like a descending triangle. That bouncing ball is losing momentum every time. There's that triangle, descending triangle there. Bottom heavy 30-minute candle. Would need to hold back above like 71 to be threatening. If you guys enjoy the stream, hit that like button. Be sure to subscribe. Like I said, the YouTube algorithm's kind of screwing us recently, screwing a lot of channels. So if you guys enjoy my content, just be sure to subscribe, hit that bell. You guys know where to find me every day. We just don't really have a bullish cluster of Delta at all today. We had one right before the open on that 9 o'clock candle, and that was pretty much it. We're just not really building a big support node. Turning into a lowercase b. Okay, big failure for the sellers here. They're failing to break this 30-minute low. Trying to break out of this bouncing ball pattern, this descending triangle. See if they can actually build some bullish delta above 71. They have failed to do so pretty much every single attempt. NASDAQ hitting VWAP for like the 7th time. 1, 2, 3, 4, 5. We'll consider that 1. So 5, 6, 7. The 7th attempt, if you don't count right away when VWAP started. I don't really count that. The 7th attempt to find value above the daily VWAP, which is the weaker VWAP. And the 6 attempts prior have failed. That point of origin zone has been filled in. Let's delete that. We've got 1 left. Going back to 65. Then we have a big gap because this is a very one-directional move. Going back down to 45. Yet again, failing to find value above 71. The relationship between the order blocks in your chart and your volume analysis. So like these point of origins, they're basically order blocks. So I'm assuming that's what you're talking about. Those are just zones that I'm paying attention to. So those are zones that very often can give you trades based on my playbook. So like sweep trades, absorption trades, value trades, just pretty much any of my trades most of the time, if they're not related to like VWAP or something like that. Those areas are prime areas for the trades that I look for. So I like to highlight those just to remind myself, hey, pay attention in this area. It doesn't mean I'm just blindly trading them. It just means that I'm paying attention to see if there is a trade in that zone. I've just identified that these point of origins, one of the oldest things I've taught on this channel, I think it's our very first video, or one of the very first videos on our channel. those point of origins tie into the trades that I like to take. They're not exactly order blocks, they're very similar. It's kind of my method of order blocks, I guess you would say. This is that bouncing ball here. Bounces, bounces again, lower momentum, bounces again, lower momentum. If you want a perfect example of the bouncing ball strategy, or pattern, I guess you'd say, not strategy, look at the Bitcoin daily chart in 2018. That was pretty much the main pattern for that entire, what, 1 to 2 year period. Okay, 7 out of 7 on NASDAQ. It's bounced into VWAP 7 times. It has failed 7 times. That's a good time to remind yourself when we take these trades, when you take any trade, and you're like, okay, what am I targeting? And you're like, all right, I'm targeting high of day. Whatever, right? You have to ask yourself, like, okay, if it gets to my target, how many levels, like, what does it have to break to get to my target? And if you're betting on a break of VWAP on NASDAQ, you are betting on something that has not happened a single time today. It's like when you're trading a 1 time frame, and it's 1 time framing bearishly, and every single candle has failed to break the 30-minute high. And you're taking this trade in your mind, you've lied to yourself, and you've told yourself that this is a high probability trade, and you're betting on it breaking that 30-minute high. You are betting on something that has not happened a single time today. So how is that a high probability trade? That would be like today. 30-minute high, left alone, left alone, left alone, left alone. We have not lost a 30-minute high. Every single candle has taken, actually I take that back, it has not. I was going to say has taken out the prior low. This candle here failed to take the prior low by 3 points, or not even points, ticks, 3 ticks. And now we are fixing that problem. So nearly every single candle has taken out the prior low. So if you're betting on a break of VWAP and a break of the 30-minute highs, you're betting on 2 things that have not happened a single time today. So you need to remind yourself in your trading, when you're taking these trades, is my target achievable? Is it probable? It's a cross your fingers and hope kind of strategy? Exactly. And like I said, hopes and prayers is not a trading strategy. Bouncing ball has come to an end. If you don't know what I'm talking about, if you didn't trade Bitcoin back then, in the worst year probably ever to trade Bitcoin, let me show you. There's your bouncing ball. Every time it bounces. Lower high, lower high, lower high, lower high until it dies. Unfortunately, I was one of the schmucks that thought this was going to go up. I lost a good chunk of money on this move down. We thankfully made it back. But yeah, I lost a good chunk of money on that little drop. This was actually one of our funny Discord stories where I stayed up until like 7 a.m. We were trading it pretty much nonstop every day. Happening. Nothing was happening over and over and over again every hour, right? And I finally said, all right, guys, I'm going to bed. I'm tired. And the second I laid in bed, within like maybe 5 minutes, it was the largest move in Bitcoin's history, in the entire history of Bitcoin. It was the largest 15-minute candle move in the entire history of Bitcoin. And it wiped out one of my accounts. But thankfully, after that, we had the incredible market of 2019, 2020. Probably one of the best markets for crypto in its history. I don't know what QRL is. I don't know what that is. All right, here's that point of origin. So this is our last one, I believe. No, one more. So this is our last one for a good while, 20 points. So if it doesn't bottom here, there's not really a lot left. You could argue these are single prints. These are pre-market single prints. Going back down to 45. Yeah, going back to that story, that loss was pretty painful. But it just reminds you that you can come back from losses, right? Like we had the incredible market of 2019, 2020 after that. So if I took that loss and I was like, all right, I'm just done trading, I lost too much money, I'm going to call it here. I wouldn't have made all that money back in 2019, 2020, right? You got to take your losses and learn from them and build from it, right? Yeah, I didn't lose everything, Jake. It wasn't like a complete liquidation. It was a very big loss, but it wasn't like a complete, I put everything into one account and got liquidated. Yeah, I don't care about stuff like that, Taquito. I don't care about like buzzword stuff like that. Um, if it works, it works, right? We'll see how we'll see how it pans out. See if it actually is revolutionary. But a lot of the times, especially in crypto, when people talk about like, oh, this coin is revolutionary, it's not. 99.9% of crypto coins are dog shit. They are not revolutionary. They're like, it's like penny stock trading, right? Penny stocks are the same way. 99.9% of them are complete dog shit. They come up with this like buzzword strategy to get people's attention, and it just doesn't work out, doesn't pan out. So I've learned not to invest or plan based on stuff like that. But that's just my my trading philosophy, I guess. What's going on? I think just a weekly magnet strategy is going on. I think our weekly magnet is pulling us back before the FOMC, very typical. This is about where we stalled yesterday. They tried to find value below 64. You can see it right here. We tried to, you can see that volume shelf. There's a volume shelf right here at 65 to 64. They could not find any seller value below that level, and it quickly bounced. That's kind of where we are right now. We're trading at, well, we were trading at 63, 64, and look at that. The buyers are coming in. So yet again, they are failing to find value below that 64. It's kind of the last volume shelf that is protecting you. Look at that shift here. See this bottom heavy delta, bottom heavy delta, bottom heavy delta flips. And now we have top heavy green delta, buyer delta, right? Flipping right on that 64 level. Turning into a 30-minute sweep. We'll see if it can actually change our structure here. I would say this sweep is definitely the start of a potential market structure shift. We don't know that just yet. We don't want to predict too much. We don't know if it's going to put in higher highs and higher lows and actually change our structure. But sweeps are a very good start. So now we watch these 30-minute highs. We watch these clusters of candles on the 1 minute. Can we actually change that structure? It is the first 5-minute candle today to actually turn the delta candles green. So you're actually getting some green delta here. Yeah, FOMC is tomorrow. Yeah, it's 2 p.m. Yeah, you've had a couple of contrarian trades today. You've had a couple of sweeps that didn't kill you right away, right? You had the sweep around like 10, 12. That was a good sweep. You had this sweep here. That was kind of it. Those two sweeps. NASDAQ gave you a few more. You had one around like 957, 1012, and then around like 1045, and then this one here. The bounces are not terrible. Like if you're trading the range and you're getting out of like the middle of the range, high of the range, whatever, they're not terrible. It's just dangerous. Like going against this downtrend is pretty damn dangerous. They have definitely given you enough points to be like, okay, I could just take this as a scalp and get out of it. So these are the bounces that are very dangerous for a lot of traders because, like I was just saying, these sweeps do not confirm that your market structure has been broken, right? That you're changing market structures. But they do start that shift, right? So people take these sweep trades and they build this plan out that we just talked about earlier about possibly going high of day or breaking VWAP or breaking these 30-minute highs, right? They make this very elaborate plan that requires so many dominoes to fall into place. It requires so many things to happen back to back to back, right?
You need those higher lows to form. You need the higher highs to form. You need VWAP to break. You need VWAP to act as support. Then you need to push away from VWAP, hit that value high. Then you need to hold above that value high and then go into high of day, right? All these things, domino by domino by domino. And they take these trades thinking they're like very high strike rate for this very large trade, when in reality, they could just take the sweep and then maybe target VWAP and then they're done, right? That's a good trade. Call it a day. Call it a trade. So you need to understand like where you can put your target and have a good probability of getting to your target. You don't want to be putting your target somewhere that you require so many things to fall into place for it to hit your target. Yeah, I think it's 85. You want a techie? It's the reason why you can look at pretty much all of my playbook trades. And we always have like a close target. Like the rollover top trade. VWAP is always the first target because VWAP is usually pretty damn close. There are rarely rollover tops where you have like VWAP really far away. But most of the time, you have VWAP fairly close to where you're getting in that trade. So you don't need the entire day to shift and break structure for your target to be hit. But then we have our extended targets if it does want to do that, right? If it does want to give us that very large trade, right? Snipe, what is so garbage? I'll have this argument. Go ahead. What is so garbage about it? Let's hear your thoughts. I will entertain this for a few minutes, I guess. Hey, Lucio, good morning. Payouts are often delayed with every possible excuse used to avoid payout. I'm debating on whether if I even want to go into this. What is your evidence that they are often delayed? Meaning that when you're saying often, you're implying that I'm assuming majority of people that are getting payouts, their payouts are delayed. What is your evidence of that? Is it a Reddit community? People have this like problem online, and this goes for everything, not just trading, not just prop firms. There's this massive problem online with social media and like review sites, Yelp, even like movie reviews, like Rotten Tomatoes, whatever, literally anything. And the problem is people don't understand what like a loud minority is. How many times do you guys go out to eat at restaurants and you have an okay time, you have a good time, whatever, and you don't feel the need to leave a review? But then you go to a restaurant, you have like a horrendous experience, and you're like, I need to tell people about this. So then you go put a review online. How many products do you guys buy on Amazon on a daily basis? And how many of those products do you guys feel the need to put reviews on? My argument is this goes for every community, every career, every aspect of life that is online. You cannot listen to a loud minority. The problem with Apex and the problem with pretty much every single prop firm is what happens to traders when they lose. By the way, we're putting in a higher low here, so keep an eye on this. The sweep is turning into a higher low, potentially a higher high. So we might be able to change our market structure here. I would argue that this is a very nasty accumulation. So for an absolute break of market structure, we need to hold above this range high. Think about it as a value area or a node. We would need to stay above this value high. So I would like to stay above like 74 here for this to be a confirmed break of structure. Now, obviously, that's 10 points away from the low. So you could trade that in a shorter, in a smaller sense without that break of structure. But that would be the definitive break of structure, is going back to like 74, 75, holding value above that level. So keep an eye on that. What the hell was I saying? I forgot what I was saying. Oh, yeah. The problem with traders, in particular, is when they lose trades, they get emotional and they get angry and they want to blame somebody else. They want to make excuses. So, of course, what's the easiest thing to blame? The easiest thing to blame is the prop firm you're trading with. Oh, why are they not paying me out? It's not because I broke 5 rules. It's because they suck. Why am I losing trades? It's not because I'm poorly managing my trades. It's because there's a trailing drawdown hunting me. Traders are very emotional beings. Every time they lose, not everybody, obviously, but a lot of them, they get emotional, they make excuses, they blame. I got people who blame me. I'm not even telling you guys where to buy or sell, and I still get blamed. Traders do not like having accountability. So the easiest thing to blame is the prop firm. And what do they do when they blame the prop firm? They go on Reddit, they go on Discord, and they cry about it. And then people look up reviews because they want to find out if Apex or these other prop firms are shady. So they type in Apex reviews on Google, and what's the first thing that comes up? It's these crybabies on Reddit and Discord and wherever else they're crying about it. Because what's the internet love to do? What do these algorithms do? They push negativity. That's been proven time and time and time again. Negativity breeds negativity. It brings out more views. So that's always going to be the first thing that people see when they look up stuff like that, is they see the loud minority being negative. Let's be honest, most prop firms are scams. I might agree with you on that one. I don't know like how many prop firms are popping up every day, but I might agree with that. Yeah. I would probably say most are scams, which is why I'm not a streamer that pushes 10 million prop firms on you guys. I've gone to streams before and they're like half their screen are prop firm codes they're trying to get you guys to sign up for. I have almost exclusively only pushed Apex for the last like 2 to 3 years because I believe in their company. I use their company on a daily basis. I have members that show thousands and thousands of dollars of payouts with their company. I believe they're still the top dog in the business. There might be 1 or 2 prop firms that you could argue are taking that space. But yeah, I might agree with that. I might agree that most are scams. But to breed this negativity that Apex is a scam, that's like a objective lie. That is a proven fact that you are wrong. But yes, you can have the opinion that most are scams. I'll allow that. Negativity sells. Yep. Yes, it does. This goes for everybody in here. I've said it many times. If you guys are constantly finding someone else to blame, or you're crying that the market is manipulated, or you're coming up with excuse after excuse after excuse, this is not the career for you. Press that X, stop trading, go find something else to do. Because if you have that mentality, you are going to lose a lot of money, and it's just never going to stop. You're just going to bleed out slowly with your capital, and you're never going to fix your mistakes because you're always going to blame something else. And you might be able to do that in your other careers. You cannot do that in trading. There is no one to blame but yourself. And if you can't accept that, this is not the career for you. And I implore you to stop. Because I don't want you guys to lose your life savings or lose a bunch of money. What a great time for my stream to start dropping. My stream is lagging, guys, so if I randomly disappear, I didn't quit on you guys, I swear. And the other argument, I'll end the rant here. This is my last argument. One thing I cannot stand is when people constantly complain about these prop firms, not just Apex, any prop firm. They complain about these prop firms having these rules. And it's like, why do these prop firms have all these rules? Oh my God, they want us to lose money. It's like, yes, guys, to a certain degree, they do want you to lose a little bit, right? Because they have to make money so they can pay out their other members that are making money. If they don't make money, how the hell are they going to pay out people who are making money? People simultaneously want the prop firm to be 100% legit and pay out millions and millions of dollars. At the same time, they don't want them to have any rules in place so that they can protect themselves and make money. How can those two things be true at the same time? I'm supporting Apex because I'm affiliated with them? Yeah, I am, of course. Do I have a contract that says I have to say nice things about them? No. I have like nothing in writing that says I have to be nice to them or constantly be on their side or anything like that. And you guys can believe that if you want or not. I don't really give a shit. There's nothing forcing you guys to sign up for Apex using my code. I barely even show Apex. Like, this is an Apex account, but I don't show their trading. I don't show their payouts. Compared to other channels, I push these prop firms like basically at nothing at all. I barely push them. I push one prop firm compared to 10 prop firms that these other streamers constantly push. I don't show payouts. I don't show trades. Like I said, you guys are entitled to your opinion, but it comes off as delusional for the most part, if I'm being honest. All right, we can stop ranting here in a second. We'll start paying attention. That market structure break has failed. So we had a sweep, turn into a higher low, did not turn into a higher high. So like I said earlier, we were looking for a strong confirmation holding above 74 to 75. That would be the absolute confirmation. But yeah, even short term, they did not put in a higher high here. Could it be a bulldog? It could be a double bottom here, which is possibly turning into a bulldog. We'll see. Yeah, music. My next few series will be not more so like 100% catered towards beginner traders, but they will definitely be more beginner friendly than my previous series. I have noticed that I have not remade my beginner stuff in a long time. So my next couple of series, maybe like 2 to 3 series, will be more beginner friendly. Yeah, Jake, it's disgusting, man. I've gone into that rant many times on stream, but it's just people need to massively limit how much time they spend on the internet and on social media and stuff. Especially with like all the stuff, like we're not going to get into politics and all that stuff, but it's getting worse and worse is all I'll say. It's just never ending. Negativity is just constantly getting worse. I've deleted everything off my phone. I don't have Twitter, Instagram, Reddit. I mean, you name it. The only thing I have on my phone is Discord and YouTube. People just don't understand how negatively it's impacting their mental state at all times. And it ties directly into trading, right? If you're constantly negative and just miserable all the time, you think you're going to be able to trade realistically and not be on tilt 24/7? Like, good luck. Okay, rotation has been completed. Rotation down to 64. We do have a poor low. It would need 61 to repair. Nothing in our structure has changed. They attempted to change that structure. They had a sweep that put in a higher low. They did not put in a higher high. They did not build up value above these 30-minute highs. So our structure is entirely still bearish. Now, do we continue to hold below this value low and push these EMAs lower? Does the EMAs push our price lower, I should say? We shall see. If it holds below 64, that's that last volume shelf until we drop like 20 points. So they are kind of sitting on that cliff. Now, I will say you are slightly extended. The 30-minute is outside that lower band. Lucio said, since I'm in the Discord, I realize I need another screen. Yeah, as a trader, you're almost like you need 2 screens minimum. I mean, I have 4 screens, which is basically like 4.5 because I have an ultra wide. I don't think you need to go that crazy. But yeah, I'd say 2 is minimum, maybe 3 if you have the desk space. If you want just one monitor, they have those Odyssey monitors that are like very ultra wide extended. They're like curved. It's kind of like 3 monitors in one. If I was rebuilding my workstation and I didn't buy these monitors one by one, I probably would do that. I would just buy that one really large monitor, and then I would mount a monitor above that. But right now, my setup looks like this. I have 27-inch, 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 and then I have a mounted ultra-wide 35-inch. The monitor that you guys see at all times is this one. Then I have this one split into like Discord, my news feed, and my calendar. And then this one is usually just like whatever I'm doing, like charts, or it's kind of like my miscellaneous monitor. I'm doing like whatever on here. And then this one is just all charts, just a bunch of charts. But yeah, that's how my setup is. I think realistically, you could get away with probably 2 monitors, maybe 3, depending on what size they are. Look at the cliff here. You can see the cliff in the delta. They keep selling into that volume shelf. They're trying to break it. Yeah, you could do a TV. Some people do that. They just mount like a 40-inch TV or something. Yeah, Costco does the Odyssey monitors. They have sales on the Odyssey ones. Those are pretty good. Yeah, this is a 27-inch monitor. So if you guys are just gauging like how can you fit all this on one monitor, this is 27 inches. What are laptop screens usually? They're like 16 to 17, I believe. Laptops are a lot harder to fit workstations like this onto. You might be able to put like 2 or 3 TradingView screens on a laptop. What do you mean, Alex? You mean like, what do you mean? Like actual trade entry? You mean like pressing the buttons, like the brackets and stuff like that? Resolution matters too. Yeah. IPS monitors are typically very good if you want like color and resolution. I use 1440p monitors. This is 1440p. My other one's 1440p. The ultra wide is obviously a different because it's ultra wide. One thing I will say that makes a big difference is refresh rate on platforms like Addis. If it's a very fast platform, like you have all these things coming in very quickly, the refresh rate on your monitor will slightly matter. It's not going to make a difference in your trading. It's just going to look better. But I would have at least 144 hertz refresh rate. This one is like 250. Once you get above like 144, your eyeballs can't even like tell the difference really. It's really hard to tell. But you can easily tell the difference from 60 hertz, which is the default, to like 144 to 200. You can tell the difference by just moving your mouse around. And make sure to change the resolution. So many people buy these really high-end monitors. They use them for like a year, and they never change the resolution because by default, it does not come at the high res. It comes at refresh rate, not the resolution. The refresh rate. Make sure to change that. It comes out of the box at 60 hertz normally. So you have to go into your advanced settings and make sure to change it. I've had friends that I used to game with way back in the day, and they had like a $300 gaming monitor, and they had it on the lowest setting for like a year. So make sure you're not one of those people. Yeah, Alex, I'm not going to talk about stuff like that because there's just way too many variables that go into stuff like that. I don't believe in systems like that. I don't believe in... Here's that cliff coming to an end here, by the way. If we stay below 64, watch that delta in volume. It needs to spike dramatically. I don't believe in set-in-stone systems that you can like always use the same stop loss and the same target, and you can enter every single trade the same exact way. I don't believe in stuff like that. So I don't teach stuff like that. What I tell people in my tutoring and in my videos when it comes to like entering trades, I always use like rollover top as an example because that's such a mechanical trade. So we do the same pattern every single time. That doesn't mean our stop loss is the same every single time, right? The stop loss is always going to be above the high. That is set in stone. What is not set in stone is the exact nature of that stop loss. It's not going to be 5 points every single time. You can have a mechanical entry with a mechanical bracket that is not set in stone. Like it's not the exact number every single time. It's based off a mechanical level, whether that's high of day, low of day, the ADMA 24 VWAP, whatever, it doesn't matter. It can be based off a mechanical level, but it doesn't mean that it's the exact same distance every single time. That is called trading your P&L, and that's an easy way to lose money. Now, I will make the argument that if you're a scalper, like an absolute micro scalper, you're trading 10, 20, 30, 50 times a day, and you're constantly looking for the same trade every single time. I would argue in that environment, you can use set-in-stone brackets with like the same stop loss, same target, because you're only trading like one pattern over and over and over again. But if you're not being a micro scalper like that, you need to adjust your levels based on what the market is telling you. That's why people are always like, they always have this like question about, okay, I watched your playbook videos, but where exactly do you enter? Where exactly do you put your stop loss? It's like, I answered that multiple times during my video, but they just don't understand that trading is a massive, it's chaos. It's adaptive. There's variables that go into it. They just want everything to be set in stone, and it's not going to work. And I'm sure you guys have tried it, and I'm sure you guys are losing. That's why those questions always irritate me a little bit. If you can watch my playbook videos And yes, some of it could be I just didn't make the video as clear as I possibly could have. That's definitely a factor. But the other factor is if you can watch those videos and still come out and say, I didn't learn anything, I don't know where you're entering that trade, one, you're not paying attention. And two, you just want to be spoon fed. And you're just like beating around the bush. You don't want to accept that you want to be spoon fed, but you want to be spoon fed. If you can watch those videos and say, I don't know how you're trading this. And I'm not talking to you personally, I'm just talking to everybody as a whole here. Because that is as clear as I possibly can make those videos. Because there is no exact, I enter here every single time. That's not how I trade. I explain it a lot in my tutoring sessions. I explain it a lot on stream. You need to have these zones. I draw them out all the time. We're literally in a zone right now. You need to have these zones that you're looking for trades, these ideas that you're like, okay, I'm paying attention. I'm looking for a trade now. Let's think about entering. And then you take into account these thousands of variables. What are the indicators doing? What's the delta doing? What's the tape doing? What time of day is it? Where are our value levels? Are we near the POC? Like, I could just go on and on and on, right? You take into account everything I've taught over the past 7-8 years of streaming. And your brain is going through that as fast as you possibly can. Then you're deciding in that zone whether you want to press the button or not. And people are saying like, oh, I don't know how you're entering. Well, yeah, you're not going to learn 7, 8, 10 years of content in the span of a 30-minute video. You can say this is a vertical distribution on the downside at this point, yes. Because now we are chopping pretty aggressively. We're not maintaining that very strong downtrend where you're staying below the 80 MA the entire time. I would argue that this is more of a downward accumulation on the 5-minute, not the 1-minute. Yeah, Jake, I'm going to try to talk about stuff like that in my second series that we're going to make, possibly November, December. And so the first series we're making is very technical. We're going to talk about all the technical shit. Market structure, volume profile, delta, whatever. The second series is going to be more psychological. So all these like rants that I go on stream about the psychology behind trading, I'll try to make that a lot clearer. Sorry guys, I didn't mean to like rant for over an hour today, but when price action does shit like this, there's just not a whole lot for me to analyze. You guys know me, like I said, my strategy is mainly trading shifts in momentum, and this momentum has not shifted right. This is all kind of one big trade. There has been no change in structure. This is bearish. It has been bearish since the very first minute. NASDAQ gave you many more opportunities to get in this responsively, like on the bounce backs. It hit VWAP 7 times and failed 7 times. ES, not really the case. ES was more so just protecting the range high, was protecting the 30-minute highs, that sort of thing. Yeah, it's one thing if you guys are new to my content, it's one thing you guys will get used to. is I go into rants every now and then when I'm not actually looking for trades, or if I'm not looking at bar by bar analysis. I promise you, I am purposely not paying attention. Trying another 30-minute sweep here. So like I said, 30-minute sweeps are a very good start to a potential market structure shift, right? If it turns into like a sweep that ends up being low a day or high a day, what happened step by step was the sweep started, then you broke structure by putting in, let's say in this case, a higher low than a higher high. Then you started breaking all the other levels, maybe the POC, the value levels, VWAPs, whatever, right? The trails started waterfalling bullishly, all that stuff, right? Domino by domino by domino. But the start of that market structure shift was the sweep. It's not always a sweep, but very often it can be. That's why sweeps are both very good trades, but also very dangerous trades. They're high risk, high reward. Because you don't really have any confirmation. The sweep is like the only thing happening that you can go off of for that trade. But they're very high reward because if they do turn into that very large market structure shift, all of those things lined up, right? It waterfalled. It started out as a sweep, then a market structure shift, then the 30-minute highs were taken out, then VWAP was taken out, the trails were flipping, the value high rotation happened, all that stuff, right? Maybe it's even so strong that you flipped the entire day and you went back to high of day. High risk, high reward. Very low confirmation. Sometimes they can turn into massive trades. But all right, I feel like I'm getting lightheaded. I've been ranting for so long. We're going to call it a stream. I will be streaming in Discord the rest of the day. So we'll keep an eye on this potential reversal here. You have a 30-minute sweep turning into a higher low, potentially. Like I said, watch those dominoes. Watch that waterfall. Are we waterfalling back to the upside here? Are those trails flipping? Are the VWAPs flipping? Is the delta flipping? Right? We'll talk about that in Discord. If you guys are not in Discord, I'll see you guys tomorrow. I will be streaming for the morning stream and the FOMC stream, of course. So we'll do the FOMC stream in the afternoon. We will do the press conference as well. Like I said earlier, guys, YouTube is kind of changing their algorithm a little bit. It's been hurting a lot of channels. So make sure you guys are subscribed. Make sure you're hitting that like button. Make sure you guys are leaving comments on the videos and stuff if you guys want to support the channel. I do appreciate all that help. If the algorithm is not pushing my content, you guys know where to find me. I stream every morning. We start around 9:15, 9:20 in the morning. That's about 10 minutes before the open. And then we stream typically until 11:30, 12 o'clock. So I'll be streaming same time as always tomorrow, so I'll see you guys then. If you guys want to support the channel, you can use code BREW on Apex, BREW. You can check out Addis. There's a free trial down below. I believe Apex is 80% off still. And that's all I got. I'll see you guys in Discord. If you guys are not in Discord, I'll see you guys tomorrow. Peace out, guys.